management and staff, and also to the members of the public that are following our meeting in different platforms. We are going to take an application from Kai Harip Municipality. It will be presented by Ms. Mapinya. Over to you, ma'am.
Thank you, Chairperson. Good afternoon to you and members. Chairperson, Kai Harip is in the Northern Cape, and it is applying for a 9.1% chairperson. They have consulted, but no communication was received with regards to the stakeholder comments. We've also conducted our own public participation process. Chairperson, we have not received any comments. Chairperson, I'd like to take you to table 3 and indicate that although the municipality is operating at a deficit of 14.73 and energy losses of 31.42, there is a slight improvement from the previous year. And if you look at table 4, if the municipality were to reduce its losses to 6%, it could generate an additional revenue of 41 million. So the municipality will therefore be required to implement interventions to reduce the energy losses and also improve its collection rate to improve its financial performance. The municipality submitted a cost of supply, revised cost of supply based on a cost plus methodology. And table 5, Chairperson, table 5, Chairperson indicates that the municipality had applied for a revenue requirement of 170. But however, we've disallowed for inefficiencies. You'll see that there's a 15 million there that has been disallowed based on the ESCOM bulk account, as well as adjustment for energy losses that are over 30%. And then after the adjustment, if you come to, I'm sorry, Chairperson, I didn't have the breakup, the table that shows this. So I'm gonna just talk to I didn't have one table, so I'm just gonna refer the members then to table 6, that shows now an allowable revenue requirement of 155 million after those disallowances. And this, Chairperson, results in a surplus of about 20 million, translating into a 13% on the revenue. And the risks, Chairperson, to ensure that the surplus complies with EPP position 1. It was tested against risks such as the high energy losses, the collection rate, as well as customer affordability that could also impact non-payment and bad debts. And then in terms of the OPEX, Chairperson, if you see table 5, it's also not broken down there. It's 51 million, and if I can perhaps break it down, that Depreciation is about 60 million, and salaries it's about 3 million, and then repairs and maintenance. Sorry, can I just verify? Sorry about that. Yeah, so depreciation is 6,018,844, and then network repairs and maintenance is it's 3 million, and then that adds to and then there's a 42. Sorry, Chairperson, what's happening? Depreciation is depreciation is 6 million, yes. Network and repairs, it's about 3 million, and then OPEX is 42, then that lumps to 51 million, Chairperson. And then in terms of cross subsidy, there is some level of cross subsidy within the municipality, and there's a need for a framework to address those issues. And then the municipalities' cost of supply results into a 34.75%, and they are applying for a 9.01% throughout its tariff categories. And then I would like to take you to the recommendations that the tariffs that are based on the cost of supply be approved for implementation on 1 July 2026, and the COS be noted. And the municipality will be asked to submit a smart energy losses reduction plan by 30 September, and the municipality will be asked to submit all the costs related to the cost of supply for further verification by the municipality, by NERSA, sorry. I thank you, Chairperson.
Thank you, Ms. Mapenya. Just before I ask members to come in, and I think the last recommendation there on page 65, we have requested that it be amended to read that there will be quarterly reports submitted on smart efficiency improvement measures on identified losses. On that note, with that amendment, members, may I allow you to come in with questions, issues of clarity, or points of enhancements that you may have on this particular application. By show of hands, please, you may come in. Thank you, members. I see Mr. Mkiza's hand is up.
Thank you, Chairperson. I think it is going to be very important to amalgamate these tables to the typical table 5 that we have been dealing with. It also makes it a bit difficult with the revised figures, really to have a, in terms of the nitty-gritties. I take it that they will also go through a fine comb in terms of putting those numbers where they belong. I know the challenge of the energy losses being high, despite the slight improvement of going to 31.42% from 35.73%. And also, I noted that the slight improvement also on the surplus of 44 to 44.62% minus, and then minus 40.73%. So one can see that it's not just the issue of energy losses, but other measures as well. Because the same is also confirmed in table 4. I think it's going to be important to kind of reflect on that, and the issue of repairs and maintenance in that amalgamated table, I think it will still suffice that it be retained as a single line item. I'm just concerned that we don't have sight. So if Madam Avinya will quickly work on that submission in terms of the review of those figures, so that we can have them. But I would still be amenable to approve, subject to them being to that enhancement of the submission. Thank you.
Thank you, Mr. Mkhize. I don't see any other hand. I don't have any comments on my side. On that note, members, the recommendations have been read into the record. They are on page 65 with the enhancement of the last fourth recommendation that I've read into the record, and as well as the enhancements in terms of the figures that have been read as correction by Ms. Mabinya, and as well as the enhancements proposed by Mr. Mkhize on the amalgamation of some of the tables. On that note, members, can I get an indication that you do support the recommendation as read into the record and as well as enhanced? A show of hand, please. Thank you, Mr. Majola. I do support. Thank you, Mr. Mkhize. We then move on to the next set of applications. We'll start with Emadlangeni Municipality. Tatehari, this is a submission that was considered, but it had to be taken off the list for some critical issues to be addressed. Please, if you can emphasize on those issues that the member said needed to be made on this particular application, we will appreciate it, because we have read it, and we just want you to assure us that we have addressed the issues that members raised. Over to you, Dr.
Thank you, Chair. Good day. This application from Emadlangeni is a resubmission before the members. The members advised us that we bring it again to deliberate more on the issue of depreciation. Chairperson, the depreciation was verified on the audited annual financial statements, and it was calculated using the straight line method over the useful life of the assets within the municipality. The figure for depreciation that was verified is currently sitting at 228,744, and the asset value are at 5.7 million, and other expenditures that are related to the revenue requirements. We include the bulk purchase, salaries, contracted services, material and supplies, and other general expenditures. Chair, if I'd go to the recommendation, the recommendation read as follows.
Before you go to the recommendation, just confirm that with that evaluation of the depreciation, there are no changes in terms of what has been applied for by the municipality or your assessment, so that we repeat it for the record, and then you can move on to your recommendation. You may come with that.
That is correct, Chair.
There's no change in terms of all the other figures other than the correction on the depreciation or elaboration on the depreciation.
Yes, the elaboration.
Okay, all right. Thank you so much. You may read the recommendations into the record then.
Thank you. The recommendation read as follows. We kindly ask the members of the REC to approve the 10% tariff from Emadlangeni to be implemented from the 1st of July, and to note the cost of supply submitted by the municipality, and also municipal to submit audited report to NERSA to allow us to do the independent verification, and also for municipal to submit a quarterly smart energy losses report for us to monitor the performance of the energy losses. Thank you, Chair.
Thank you, Mr. Khari. Members, any points of clarity or enhancement? Yes, Mr. Madrola.
Yes, thank you, Chair. Look, we've got a, what do you call it, a supplementary document here, what is called supplementary two-pager for eMadlangeni municipality. And I'm looking at the bottom line there. It says that where they've got a breakdown, general and the others, and it's also got shared OPEX. And then there it comes down to 5.816 million. So that is the OPEX. And then when I look at the table in the actual document now, the table of the revenue requirements, it's got OPEX including depreciation, but there the number is 6.405 million. So my question is, okay, how do we reconcile these two numbers? And I just want to confirm whether maybe my understanding is correct. It sounds like in the supplementary document, which was 5 something million, you did not include depreciation in that entire table that you had there in the supplementary. Whereas here in the main document, in the RFD, your OPEX is 6.4, because you included depreciation. I just want to check whether my understanding is correct. And Chair, you can see that's the problem. Sometimes the way in different tables, how we report things. So I just wanted to check whether my understanding is correct to reconciliation between the supplementary document as well as the RFD.
Thank you, Mr. Madrola. Any other hand? I think from my side, Dr. Khari, just to indicate or confirm, because when we were referring you back to go and address the issue of depreciation, it was in light of the provision that was mentioned as a policy provision 54 in the EPP that deals with analysis process where the items are not clear or transparent. There's a guide as to what you need to do, how you should deal with those particular items. So just confirm that with the report that you've given us in terms of what you have done, did you take into account that policy provision? And if so, I would like you as well to then enhance the submission on page, I think it's page 12, under policy framework EPP, just to add this policy position 54, because we only talk there of policy position 1 and 2, and we haven't touched on this particular 54. Mine is just to get confirmation to you that you followed 54, provision 54, and also to enhance that section in the submission. But I see Mr. Mkiza's hand is up, and that day, Chabalala, I see your hand. Let me allow Mr. Mkiza to come in. You may come in, sir. Mr. Mkiza.
Thanks, Chairperson. I just got a concern regarding the clarity on depreciation. My understanding is that when you look at the response provided, because the depreciation is indicated as sitting at, which look current year depreciation, then the supplementary two-pager. It's 228,742 rands. And we just to say it was verified in the audited annual financial statement. Understanding is that the annual financial statement, they provide wider than just electricity distribution assets. And therefore, we need to, when we're presenting on it, to zoom into what pertains to the electricity distribution side of things. And that is not coming out clearly. If we can just improve this narrative, I think we've already spoken about the EPP principles, that you also include those. Just beef up this response. Because when something is referred and you are still found short, it's as if you are not really taking these comments or guidance provided seriously. Thank you. I know you do, but you need to demonstrate it. Thank you.
Hari, do you want to come in? You are muted.
Can I allow Mr. Chabala to come?
Oh, okay. You may come in, Dr. Chabala.
Thank you, CEO. I think I'll start at the last issue, Mr. Mkiz. Maybe what didn't come out clearly is that in terms of the table, if you can realize it's broken down, but not to the extent that the team has indicated that it will. So in terms of once we come back with the sort of broken down table, it will speak to even the aspect of the elements that we use, Chairperson, that you questioned in terms of how we actually go about it, the principles, also embedding the issues of prudency embedded in Chairperson. Once that table is broken down, Chairperson, it will come out very clearly, Chairperson. And then around the issue of depreciation, it's also covered under this MBIT. And you are quite right, Mr. Majola. It's supposed to then tie back to that table one. It's just a matter of us verifying in terms of what happened, but it's really supposed to then tie up. And then on the first question that was raised, Chairperson, around policy positions, I think this is quite similar to an issue that's going to come up a bit later in terms of when we speak to the legislative sort of framework, it's supposed to then be standardized across all sort of licensees. I don't think it's going to apply only to this particular municipality. So what we'll do is that as a team, we'll go back and make sure that in line with the guidance that was even provided in the past to say that we must mention all these sort of pieces of legislation that sort of impact into this process. This will be done. Thank you, Chairperson.
Thank you, Mr. Chabalala, Mr. Mkiza, and Mr. Majola. I'll start with Mr. Mkiza. Mr. Mkiza, are you covered with the responses?
I'm covered with the responses. What is left on my side is the issue, because I had the same question with regard to what Mr. Majola asked, but is the issue of saying, are these numbers telling? That for me is what is important, because you've got these figures. After doing this breakdown, are there any changes? Because if numbers change, it means that the sum total or the product of that should change. It could be a question of, is it significant or not significant? If it's the same, it should also be clarified. But we're also talking here just to get these numbers to talk the same language. Thank you.
Thank you. Mr. Mkiza, if you can come closer to the mic, I don't know. For me, you sound as if you're too far. I don't know, maybe it's me alone. I don't know if the other colleagues or Mr. Majolo can hear you or the staff member can hear you. If they don't, I'll ask them to raise their hand. Mr. Khare,
I'll try to raise my voice, Chairperson, because as I said, I was relocating. So please, my apology. Thank you.
Okay, all right. Dr. Khari or Dr. Chabalala, do you want to come in and respond to Mr. Mkiza's point?
Thank you, Chair. The numbers they do tally, just that the one on the 2-pager and the one on the RFD, the difference is that the other one is too detailed as compared to the other one. Thank you.
Okay. Okay. Mr. Majola, did you have any follow-up?
I'm covered. Thank you.
Okay. Thank you. Members, with those recommendations that have been read into the record, can I get an indication that you do support them? And also noting the enhancements that have been presented on the issues that were referred back to the analysts. By show of hand, please, members. Thank you, Mr. Majola. Thank you, Mr. Mkize. I also support. So let's just then add those enhancements into one submission such that it flows, because it's going to be part of the RFDs that will be shared with the applicant. We then move on to the next application, which is Emakazeni Municipality by Ms. Nkopo. Over to you, ma'am.
Thank you, Chairperson. Emakazeni submitted an existing COS study with the revenue requirement, which was determined using the cost of supply methodology in line with the NERSA COS framework. The approach establishes allowable revenue based on a structured build-up of costs. All cost drivers were verified against supporting documentation, including D-forms, audited financial statement, and the trial balance. Only prudently incurred and efficiently managed costs, together with the reasonable margin, were considered for approval. All adjustments with Section 15, Chairperson, Section 18 of the Section 18.7 of the COS framework, with the following key assumptions, were considered. That talks to the bulk purchases cost escalated by 9.01%. Controllable electricity OPEX adjusted based on CPI-linked assumptions, all inputs subjected to reasonability and verification checks. The municipality calculated its depreciation using the straight line method over the useful life of its assets, consistent with the asset base of approximately 319 million, with a depreciation of 11 million, and this was verified against the trial balance and the audited AFS. And then, Chairperson, the revenue requirement amounts to 90 million bulk purchases with OPEX around 28 million and a depreciation of 11.5 million. When looking at the technical performance of the municipality, while the municipality shows a moderate improvement in its deficit, however, the energy losses have worsened significantly from 47% to 55%, and this is posing a material risk to the sustainability of the municipality. If the municipality had maintained its energy losses within the 12% range, there could be a revenue improvement of around 46 million, and then that would push the position of the municipality from a deficit of 32% to a surplus of 7%. And also, Chairperson, if we were to consider the 6% revenue energy losses cap, the revenue would have improved further to 52 million, with the position improving significantly at 11.34%. Chairperson, I would like to highlight that the municipality has indicated measures that it will put in place to cap these energy losses. And then when we look at the revenue requirement, the initial revenue requirement amounted to 190 million. However, due to the disallowed inefficiencies, which were the energy losses, which were kept at 12%, amounting to 46.26 million, and the interest paid to ESCOM, which amounted to also 19.5 million, was deemed inefficient. All these costs were deemed inefficient because they were within the management control and therefore cannot be recovered through the tariffs. So we are left with the final revenue requirement of which amounts to 124 million, and then the tariffs are adjusted. Okay, when we talk to the finalists, the conclusion on the COS, Chairperson, we see that the adjustment to reflecting a 9.19%. However, the municipality has applied for 9.01%, And then the recommendation is that the 9.0% be applied to the tariffs. And then the municipality has applied this 9.01% uniformly across its tariffs. And then the municipality will be requested to develop a fair and transparent cross-subsidy framework. And then with regards to the public participation, NERSA conducted its own consultation process in compliance with PAJA. No objections were received for this application. The municipality followed its own council-approved consultation process, and proof of such consultation was submitted to NERSA, which was an advertisement for this process. And then when we talk to the recommendation, Chairperson, on page 28, the tariffs that are based on the COS report are approved as recommended in the tariff analysis section for implementation by the municipality with effect from 1st July 2026. The cost of supply report submitted by the municipality be noted. The municipality is required to submit a report accounting for all the costs that have been noted in its cost of supply study to enable the regulator to perform its independent verification process by 31st January 2027. The municipality is required to continue to monitor its smart plans put in place in reducing the high energy losses and submit progress report to NERSA on a quarterly basis commencing 30 September 2026. Thank you, Chairperson.
Thank you, Ms. Nkopo. Members, questions, issues of clarity or points of enhancements that you may have on the application from Emma Kazeni? By show of hand, please, members. I do not see any hand. Ms. Nkopo. Oh, let me allow Mr. Mkhize. You may come in, sir.
Chairperson, I am covered on this one. I think it's going to be of importance to also, consider how these issues pertaining to municipalities and excessive distribution get published. So that there can be changes regarding, for example, the energy losses, the surpluses there, and other challenges, things that must be out there for everyone to see areas of improvement, and where people have allowed thieving to take place by way of electricity theft, etc. They can be aware that at the end of the day, these things also affect the very same residents in those areas. This is just something that I think I must just echo. Otherwise, I support the recommendation. Thank you.
Thank you, Mr. Mkhize. I was just going to comment on the high energy losses that seems to be going high. And I support what you have highlighted in relation to that. On that note, members, the recommendations have been read into the record, and there are enhancements that have been made in other application that applies here, in particular page the revenue table on the issues of revenues, if it can also be addressed when the RFDs are enhanced. And by show of hand, members, can I get an indication that you support the recommendations with the enhancements made? Thank you, Mr. Mkhize. Mr. Majola, I do support. We then move on to Mfuleni Municipality, Ms. Mapitsi.
Thank you, Chairperson. Mfuleni local municipality is situated in Gauteng province, and the municipality submitted its tariff application together with its cost of supply study by 31st of March 2026. The municipality conducted its own public consultation process, and proof of consultation was submitted, and no correspondence was received from the municipality on the comments received. NERSA also published the application in terms of section 10 of PAJA. No objection were received. With regard to the revenue requirement, the revenue requirement as reflected in table 5 was determined using the cost plus approach, and in line with the NERSA cost of supply framework, the allowable revenue was based on verified bulk electricity purchases and electricity operating costs supported by the 24-25 deform trial balance and the audited AFS. Only prudent and efficient costs together with a reasonable surplus are recommended for this particular licensee. The asset value for this electricity business sits around 1 billion, and a depreciation of 49 million was extracted from the municipal AFS and the trial balance, and also was verified with the deform. To ensure that surplus is aligned to risk and comply with the legislation, a key requirement of the NESA COS framework is that only efficient and prudent incurred costs may be passed through to the customer. In compliance with this requirement, FPE paid to Eskom amounting to 1.233 million was identified as inefficient and was excluded from the allowable revenue, as these costs are funded through the equitable share allocation. Furthermore, NMD exceedance penalty amounting to 1.586 million were excluded from the total cost, allowable revenue also, as these costs are, we regard that the municipality need to pass these costs to the customers that are causing this exceedance. I just want to highlight also, Chairperson, that this Munich had a interest due to Eskom of around 115 million, but they did not include it when they submitted this application. The sensitivity analysis was performed to ensure that if the losses were kept around 12%, 12%, the financial position improves materially from a deficit of 3129 to a deficit of 1230, with net loss, which is still sit around this means still, if we kept it at 12, they will still be on a deficit of 1230. This was done on 24-25 financial year. However, we've done another step, Chairperson, but I did not submit. I thought maybe it would be confusing if I submit you. But the other step that I've done, the sensitivity analysis that I've done, show that if the energy losses were kept at 12, this municipality will realize a profit, Chairperson, because going forward, this municipality won't be incurring, Eskom won't charge them interest. To ensure the surplus is aligned with the level of risk associated with the municipality, a surplus margin of 1% is recommended. Inflation margin therefore sits below the low bound of the framework range, and it's not excessive or detriment to the customers. Sorry, Chairperson, I just want 1 minute. Again, Enfilin local municipality has entered into a distribution agency agreement with Eskom, in terms of which Eskom performs electricity distribution function on behalf of the municipality, including operation, maintenance, and billing, revenue collection, customer services, while ownership of the network assets remain with the municipality. In terms of the performance, as I highlighted, this municipality performance is not very well. However, I just want to also highlight that this municipality also received let me just leave that one, Chairperson, cost of time. Share cost, the costs were verified against the deformed trial balance and audited AFS to ensure that they relate only to electricity function of the licensee. In the absence of cross-subsidy framework, the Munich is applying for 9.01. The municipality will be required to develop cross-subsidy framework. And then in conclusion, the COS3 indicate that full cost reflectivity require an average increase of 13.4 for the 26-27 financial year. However, the municipality is proposing 9.01. With regard to the cost, yes, that table 5, it's aggregated. Bulk purchase amount to 4 billion and OPEX is 373, excluding the depreciation. Other revenue is 91 million. Depreciation is 77. As I mentioned, the difference is because this depreciation is for 26-27 here. With regard to recommendation reads as follows. The tariff that are based on the cost of supply study are approved as recommended in the tariff analysis section for implementation by a municipality with effect from 1 July. the cost of supply study submitted by the municipality is noted. The municipality is required to submit a report accounting for all the costs that have been noted in its cost of supply study to enable the regulator to perform its independent verification. The municipality is required also to submit a quarterly smart efficiency with improvement measures identified in reducing high energy losses by 30 September 2026. Thank you, Chairperson.
Thank you, Ms. Mapitsing. Members, questions, issues of clarity that you may have on this application? I think I don't see any hand from the members. I think for me, it's just a point of clarity with regard to the DAA that has been made a court order between Mfuleni and Eskom. And I was going to ask if there's been an improvement in the Munich's electricity distribution business since this DAA was entered into in 2023? Yeah, I think so. And I think in your verbal presentation, you indicated that the municipality is not doing well. I'm not sure whether is it because now of the DAA not achieving what it was intended for, or is it because of the status that the Munich was in before this DAA, and therefore then it hasn't recovered to a normal or an acceptable level of carrying out the business. I just wanted to get the clarity from you. And again, in terms of the point that has been raised by Mr. Majola all the time is that we need to indicate what the municipality has applied for, which we have done. What you said, it's 9.01. However, you are not saying in terms of the analysis that you have done, you confirm with that 9.01 or not. I think we tend to leave it at what the municipality has applied, and it gives the impression that we only are accepting what the municipality is applying for to NESA, and yet we do these analyses that you have brought before us with an intention to make recommendations on them. But you don't take it to the fullest to say they've applied for so much. In terms of our analysis, we confirm what they're applying for, or, our position is that they get a lesser percentage or whatever. Please, I think this applies to all the applications. Let's not leave it at what the municipality has applied for. Let's also read into our presentation, or state in our presentation what assessment or the outcome of our assessment is in terms of the application that has been submitted before us. I'll stop there. I don't see any other hand from the members, and you may come in, Ms. Mapitsing, with the responses. Over to you.
Thank you, Chairperson. The points that you raised was the reason why they're still sitting at the deficit is because the Munich owed Eskom around 8 billion. So that is the reason why they're still, but I think going forward, we will see an improvement.
Okay.
And then in terms of this, we do confirm, but I just wanted to highlight also to say, this municipality, as much as they did a new revised cost of supply, due to time, they hired a consultant to do what do you call it? A different cost of supply study to do the rate setting and so forth, so that they can see, they will do the rate design. Some of the tariff are still low. Then with the new study that they will be bringing, we'll see the results therefore.
Thank you. So therefore, then the confirmation in terms of your tariff analysis is the percentage that the Munich has applied, just for the recording.
Yes, Chairperson. We confirm that we did analysis of this 9.01.
Yes, yeah. You guys always do it. It is in the tables, but you do not read it in the record. You just limit your responses to what the Munich has applied for. Members, on that note, any other comments that you may have or point of enhancement? I don't see any hand. The The recommendations have been read into the record. They are on page 59 to 60. May I, by show of hand, members get an indication that you support the recommendations as presented? Thank you, Mr. Majola. I do support. I don't see Mr. Mkize. Oh, have we lost Mr. Mkize? Oh, yes. Thank you, Mr. Mkize. The application is, or rather the recommendations on the applications are approved. We then move on to the next one. I hope I won't pronounce it in an incorrect manner. It's Enoch Mgijima Municipality. Ms. Liburu, over to you.
Thank you, Chairperson. Good afternoon to you. Good afternoon to members and colleagues. Yes, you are correct. It's Enoch Mgijima Local Municipality, which is situated in the Eastern Cape Province. The municipality is applying for an average increase of 12.0%, and NERSA is recommending a 9.01 increase, and this will be elaborated further during the presentation. In terms of public participation, NERSA conducted in compliance with the legislative requirements, and there were no comments that were or objections that were received from NERSA's side. The municipality, on the other hand, conducted its own public participation, and an indication of no comment was received. In terms of financial and technical performance, Chairperson, I must indicate that this municipality is in severe financial distress, and it requires urgent intervention. A 91% deficit and 53% energy losses indicate a death spiral situation. In addition to continuously rising energy losses, the municipality is facing challenges such as your NMD exceedance penalties, interest charged on ESCOM account, and increasing bad debts. The energy loss sensitivity analysis was conducted, and I must apologize to members for not including it as part of my submission. And if the energy losses were reduced to 12% and 6%, the municipality would still remain in a deficit position of 24% and 18% respectively. However, this would realize additional revenue of 186 million and 230 million respectively, which could significantly assist in stabilizing and improving their operations. The issues that were raised by members in the previous meeting and today, the municipality revised its cost of supply to align to ESCOM ERSA. The municipality utilized cost of supply methodology in their determination of the revenue requirement. The breakdown of costs that make up operational expenditure was extracted, and it shows those drivers amongst others: salaries, wages and allowance of 20 million, material and supply amounting to 1.3 million, costs associated with R&M amounting to 20 million, a further 7.4 million associated with NMD penalties. The total current depreciation amount to 12.1 million for the 2024 audited financial information. These are allocated between electricity high voltage substation of 11.1 million and machinery and equipment of 997,000. The asset value as recorded in the 2024 audited financial statement amount to 199.8 million. The municipality is not up to date with its ESCOM bulk account, which is the current account is 67.487 million. The municipality applied for a surplus of 41.0 million, translating into a 9% allowed. To ensure that the profit margin is not overstated and aligned to the risk, verification was undertaken and key risk areas identified when treating the surplus include high allowance energy losses, collection rate, which is very, very low at 47%. In extracting inefficiencies, projected revenue under the revised tariff decreased to 416% million, which is the 9.01 that we are recommending, from the 427.7 million, which is the 12.0% that the municipality has proposed. And this is an 11.4% million lower than the municipality originally proposal, resulting in a reduction projected surplus. Under share cost, all shared municipal costs were ring-fenced, and verification was done against the trial balance and audited AFS, confirming that only efficient and prudently incurred costs were taken into account. I think I have spoken to the cost of supply and the tariffs. So the tariffs that the municipalities proposed, they are all applied for. The 9.0% that NERSA is recommending is applied for all the tariff categories. The recommendations for these are on page 93. Which states that the tariffs that are based on the cost of supply report are approved as recommended in the tariff analysis section for implementation by the 1st of July. The cost of supply report to be noted. The municipality is required to submit a report accounting for all the costs that have been noted in its cost of supply to enable the regulator to perform its independent verification. The municipality is required to submit quarterly progress report on efficiency improvement measures taken to reduce high energy losses and deficit for the regulator to monitor implementation thereof by 30 September 2026. Thank you, Chairperson.
Thank you very much, Ms. Liburu. Members, any questions, issues of clarity that we may have on this application? Noting the enhancements, Ms. Liburu, that has been made on the recommendations, and as well as the need to have an additional table that indicates the rate design as indicated earlier on in other applications. Members, any questions, issues of clarity? By show of hands, then members, can I get an indication that you support the recommendation on this particular municipality, and also noting its current position? Thank you, Mr. Majola. Thank you, Mr. Mkhize. And I do support. We then move on to the next application. I think in the index of the list of application, there's also a repetition of Ephraim Mogale municipality. I think we dealt with it earlier on. Ms. Ngopo, confirm, please.
Yes, Chairperson, I confirm. I had already presented Ephraim Mogale.
Yeah, so we will remove that listing that is there of Ephraim Mogale and go to the next application, which is Greater Taung Municipality. Ms. Segwadi, it is yours. Over to you, ma'am.
Thank you, Chairperson. Good afternoon, Chairperson, members, colleagues, and public. Greater Taung local municipality tariff application is also based on the existing COS, where the costs have been adjusted on escalation tool to reflect key cost drivers for the 26-26 financial year in line with section 18.7 of COS framework. The revenue required for 26-27 financial year by the municipality is 18.705 million. Which was determined used cost plus methodology in accordance with the necessary COS framework. The actual figures were also verified against ESCOM invoices and verified electricity-related operating costs tested against deformed trial balance and audited financial statements. And only we can confirm that only prudent incurred and efficiency verified costs supplemented by reasonable surplus margin are recommended for approval. The asset value for the municipality was 1,436,851 million, and depreciation 4,247 million, extracted from the municipal's deforms and audited financial statement. And the surplus requested for the municipality is 1.837 million. If I can say that this is a small municipality with the customers, I think 300 and something. In total, it's a very small municipality. And then all these figures that I mentioned above will subject to be scrutinized using the asset register to confirm that no costs are going to be passed through to customers through tariff application. The municipality operated at a surplus of 14.50 and the energy losses of 11.15. So the municipality energy losses, they're not that high, but they are double digits. So the municipality should therefore sustain and strengthen this the intervention with clear focus on achieving and maintaining energy losses at a single digits level in line with good quality practice and cost reflective tariff principle. So also NERSA on the table, revenue table, the NERSA note that we didn't put it on the table, but we extracted it from the deform, the FBE paid to ESCOM as an efficiency. So the municipality, when they sent the cost for 26-27, did not include it on the cost submitted. So the cost to serve also recommend an increase of 10.12, but the municipality is applying for 9.50, which is lower compared to what the escalation tool is recommending. Some of the consideration for this decision include that the licensees try to maintain the sustainable tariff level to stimulate demand, ability to cover ESCOM bulk costs, and ensure customer affordability, as most of their customers are domestic, while also maintaining a long-term financial stability by trying to reduce its energy losses to a single digit. And then the redesign table will be included as advised by Mr. Mkhize, and also the impact from moving from 10.12% to 9.5% increase. We can confirm that only the costs that electricity related were included, only that. And then when it comes to public participation, NERSA complied with Section 10 of PAJA by publishing the application, and no objection were received. The municipality also conducted its own public consultation process in line with council-approved budget, and no correspondence was received from the municipality on the comments received. The recommendations are on page 159 to 160 of 398, and are read as follows. The tariff based on the cost drivers are approved as recommended in the tariff analysis section for implementation 1st of July 2026. The REC to note the cost drivers submitted by the licensee. The licensee is also required to submit a report accounting for all the costs that have been noted, and to enable the energy regulator to perform its independent verification audit process by 31st of January 2027. The municipality is also required to submit a quarterly report just to ensure that their losses reduced to a single digit by 30 September. And then lastly, taking into account all other enhancement and guidance given by members in previous meetings and today's meeting. Thank you.
Thank you, Mr. Gwali. Members, any questions, issues of clarity? I think for me, if you can ensure that there's a first point that the track changes are addressed, Ms. Gwali, is this your application? Yes, the documents that's loaded, it seems to show track changes, but when I try and, I think they are on page 173. So if you can try and address that when you finalize when you work on the final RFD, please. Mr. Mkhize, you may come in.
Thanks, Chairperson, and thanks to Madam Sikwati for the presentation. You know, from my side, I just appreciate the improvement in terms of the presentation. And I hope that these, in fact, not even hope, I expect that these enhancements are going to be expeditiously made because they talk to all the issues that you have spoken about thus far, because it's important to improve. And I don't want to be asking the same questions over and over again. And the attention to detail is something that it should be ingrained in how the management and staff deals with these matters. Whether we're looking at issues of quality assurance, I know that you also ensure that one team is able to quality assure or what the other team is doing. And as you are also assisting one another in this presentation, that teamwork improvement, we appreciate it. But let's zoom into these numbers and show that everything is to the T. I will leave it at that from my side. Thank you.
Thank you, Mr. Mkhize. I support what you've just said. And I think we do appreciate the improvements that are coming through with these applications. And on that note, members, the recommendations have been read into the record. May I then get an indication that you do support them? They are on page 160. If you do, please indicate by a show of hand that you support them. Thank you, Mr. Majola. I do support, and thank you, Mr. Mkize. We will then move on to the next application. It is an application from Kucha Municipality. Ms. Liburu, over to you, ma'am.
Thank you once again, Chairperson. Kucha Municipality is situated in the Eastern Cape Province. The municipality is applying for an average increase of 9.01% in the current financial year, and NERSA is recommending the same increase. In terms of public participation, NERSA published Kucha's application on the NERSA website, social media platforms, and there were no objections or comments that were received. On the side of the municipality, consultation with council and customers was undertaken. No indication of comments or objection from stakeholders was received. This municipality recorded an operating deficit of 9.95% in the current financial year, worsening significantly from the 1.79 that they experienced in the 2023 financial year. Although the energy losses improved marginally from 12.7% to 12.21, key areas requiring further intervention include bad debts, repair and maintenance, and salaries and wages. The energy losses sensitivity analysis was conducted, and if the losses were to reduce from 12 to 12% and 6%, the municipality would have received seen an additional revenue of 9.41 million to 34.9 million respectively, translating into a 7% deficit still and 1.95 deficit. Issues that were raised by members: the municipality revised its cost of supply to align with Eskom ERSA. Kucha utilized the cost plus methodology in the determination of the revenue requirement. I must say that the table of the OPEX breakdown has now been included in with all the cost drivers that were established that were used to establish the revenue allowed, and the asset value is recorded for the 2024 audited financial statement amounts to 167 million. For the 2026 and 2025 allocated for PPE electrical infrastructure. Current depreciation values are detailed in Table 6 of paragraph 195 of the OPEX breakdown cost, and these values are verified against the AFS information. The amount were costs relating to medium voltage networks. The municipality is up to date with the Eskom bulk account and is not in arrears. The municipality applied for a surplus of 52 million, translating into a 9% allowable surplus to ensure that the profit margin is not overstated and aligned with the risk and compliant with the EPP and the cost of supply framework. The verification was undertaken, and the key risk areas identified when treating the surplus were including the collection rate, as well as the high energy losses. All shared costs for the municipalities were verified to ensure that only efficiently and prudently incurred costs are taken into consideration. In terms of the cross-subsidization, the cost of supply confirms that there are no cross-subsidization in these municipalities, and also confirmation was received from the municipality. The cost of supply, the outcome of the cost of supply found out that to be cost reflective, municipality will need 18.2%, which amount to 451 million. However, the municipality is proposing a lower increase of 12% across all customer categories. I must also mention, Chairperson, that the municipality has SSCG tariffs, and it has decided that it would reduce the time of use SSCG winning tariffs by 50% to encourage investment in renewable energy, to increase customer participation, and also in terms of economic development stimulation, and to reduce the pressure on supply constraint. The recommendations, Chairperson, they are read that the tariffs that are based on the cost of supply report are approved as recommended in the tariff analysis section for implementation by the municipality with effect from the 1st of July. The cost of supply report submitted by the municipality being noted. The municipality is required to submit a report accounting for all costs that have been noted in its cost of supply to enable the regulator to perform its independent verification. The municipality is required to submit quarterly smart energy losses reduction progress report for the regulator to monitor implementation by 30 September 2026. My apologies, Chairperson. I didn't expect this Guha would come immediately after that. So I was still trying to enhance some of the things that were indicated by members. But thank you, Chairperson.
Yeah, thank you, ma'am. You should have indicated that so that we proceed with the next one. But I think you have done your best to make the presentation, which is appreciated. Members, questions, issues of clarity, or points of enhancements that you may have on this application? I think for me, I heard you saying that the table 4 has been enhanced in line with the recommendations, but in the submission, it looks the same. But in your verbal presentation, you did cover the issues that the members have made. When you had said it has been done, I trust that you have done it in your addendum, and that addendum of the breakdowns will be included or will be used to enhance that table 5 and any other points that members have raised. I just need you to confirm that. I would move to Mr. Mkize. You'll confirm that when you come to respond. Let me take Mr. Mkize's input. Thank you. Mkize?
Thanks, ma'am, and thanks, Madam Lebur. I think, firstly, when it comes to the table 4, that figure 2, in terms of the cost breakdown by functions, you will have then to amalgamate with your table 5. In terms of being able to break down the revenue and cost elements into the various line items, please, because you do outline that under just that table, that figure under 4.1 paragraph 4.18, and then also explain the depreciation part. What is confusing is this 4.5.4 second bullet, where you say when you're calculating the surplus, you then have to have the efficient and prudent operating expenditure plus depreciation. You put it there as a proxy for asset consumption and future replacement. Please, if you can just deal with that aspect. And I think it's for the last time I'm going to talk to this, because I previously, I think when Madam Sikwadi was presenting, I make it clear, and then she said she's going to remove that and define it accordingly. And then also, when it comes to these public consultations, I don't want to repeat this again. This applies. You are saying that there was no indication of stakeholder comment received, but for me, we should require it and not hope that we are going to receive it. If they don't supply, we need to require. So rephrase all this and post this. Let's still require that, because the issue of reaching out to residents by municipalities is very important, because it leads to all this kind of sometimes violent protests, because people feel that when they just talk, normal language, they just are gentle, they are not heard. So let's not note these things that in some small way they contribute to the better running of municipalities. And then the issue also is that if you look at the analysis of the worsening of the energy losses with increases in tariffs, we need to consider it some time. That is just for enhancement of the framework and not necessarily this submission to say where to draw the line. I think that cycle, that vicious cycle that I think one of the presenters cited, we need to really look at it, where these increases at the end of the day, they just give no hope of improvement in terms of the energy losses. To strike a balance, I will stop here. Thank you.
Thank you, Mr. Mkhize. And mine are just point of clarity in relation to paragraph 1.2 and table 2. If you read paragraph 1.2, we're saying the municipality has got the majority of industrial customers, which amounts to 43.46%. But when I look at the numbers in table 4, I seem to get a different indication in terms of the numbers of industrial customers when you compare it with the ordinary customers, domestic customers, whether on prepaid or conventional. When you combine those two numbers, it's quite high as compared to the commercial customers. I just wanted to get clarity as to whether am I interpreting it in a correct manner or not. And the second thing that is of concern, just on that table, it's the high cost in relation to street lighting, or 2.5 million. I think it's quite high, Ms. Liburu, and I'm just wondering as to how you took it into account in your analysis. And also, I do know the FBE, which I've been raising and noting that it's not within our regulatory mandate, but for the municipality to be having such a high number of domestic customers and only have 5,769 that are eligible for FBE, I think really it's just it's a very low number, and maybe in our own engagement with the municipality on the side, we need to encourage them to really ensure that they do bring in some of the indigent customers so that they can benefit on the FBE. I will stop there and you may come in and respond to the points that we have made. Thank you. Over to you, ma'am.
I think I was talking to the muted mic. Thank you once again, Chairperson. I will start with your questions, not in any other order, but the question in terms of the low number of FBE. Most of the time, municipalities are complaining about the indigent customers that are not coming forward to register so that they can be able to be allocated what they deserve. But as you are saying, that the municipality needs to be encouraged to bring them along and encourage customers to register. And then the other question, you're talking about table 2, to say that when I calculate, the highest number, as you combine the domestic, prepaid, and conventional, amounts to 43.85%, which is higher than the 43.46. I will correct that statement in paragraph 1.2. Your third question was in terms of the high amount of street light and how it was accounted for in the tariffs. In the model, when we allocate the customer categories. Street lighting also is included as a category of customers, and all their consumption are included in your sales, in the volumes that the municipalities are having. So the outcome of the cost of supply also taking into consideration those volumes from that customer. And then going to Mr. Mkhize, the table on the breakdown. Your other issue, Chairperson, is the table on the breakdown of OPEX. I have included that table, and it's table, I think it's table 6. I'm moving around. After the table on the table 5 of the revenue requirement, there is another table that I have included that is not part of the cost of supply model. It's table on operating expenditure breakdown, which is table 6 on page 195. And then the other question was to rephrase on consultation and to say that, we need to speak to this municipality to say that we need the consultation by customers. Is this well noted, Mr. Mkhize? And then I'm not sure. Also, the worsening of energy losses with increases in tariffs. It was an enhancement, and it is also noted. The depreciation, that one is also noted, Mr. Mkhize, and the write-up will also be enhanced and rephrased the way it has been written. Thank you, Chairperson. I hope I have covered all the questions.
Thank you. I think on my side, I am covered. Mr. Mkhize, are you covered? Or do you have any follow-up?
Chairperson, I covered, and but you see the issues of these high increases on fixed charges and all of that. Like I've seen a figure of 20% and all of that. I think it's on page 205 on the net billing export. They are concerning, because all I'm trying to say is you've got an increase that we're talking about here, which could always comes lower than what the resident of that particular municipality experiences on the bill in terms of what the person actually gets billed. Thank you. But I'm covered.
Thank you, Mr. Mkhize. Thank you. On that note, then, may I then get an indication from members that they support the recommendations that have been read into the record by show of hands? And this includes enhancements that have been made. Thank you, Mr. Majola, Mr. Mkhize. I do support as well. We then move on to the next application, which is an application from KwaDukuza Municipality. Mr. Chawalala, if you can take the committee through that application. Over to you, sir.
Thank you, and good afternoon, Chairperson, members, and fellow colleagues. KwaDukuza is a municipality situated in the KZN province. This municipality's performance is deteriorating, and this can be seen by a surplus that's getting worse, moving from 6.5 in 2023-24 to 11.5 in the 2024-25 financial year. In the same period, the losses increased, the energy losses increased from 25.5 to 26.7. So essentially, this municipality, Chairperson, has the potential to improve the surplus from a deficit of 11.5 to a surplus of 5.93 if the losses are limited to 12%. And this could potentially increase to 11.57 if the losses are reduced to 6%, all else equal. The municipality indicated that the high losses or increasing losses as a result of aging infrastructure, illegal connections, and bypassed meters, amongst other things. However, the municipality is implementing some measures to curb these losses, including performing monthly electricity readings in substations, meter auditing, and introducing smart metering, Chairperson. In terms of the operational costs, the municipality's cost of supply is forecasting operational expenditure of around 332 million, which represents 13% of overall costs. Table 6 provides a breakdown of this expenditure. Apologies, we note an error that it's not Table 4. It should be referring to Table 6. NESA recommends an expenditure of 245 in line with the adjustments in the table. And the reasons for this variance are outlined from paragraph 4.7.8, Chairperson. In terms of the depreciation, the recommended figure is around 34.8 million, which is based on an asset value of 933 million. This was calculated by the municipality based on the straight line approach and has been verified in line with the asset in the audited financial statements, Chairperson, to be verified ex ante, Chairperson. In terms of repairs and maintenance, these are also covered in the table in the form of materials and supplies, also a portion of the salaries, which includes wages related to repairs and maintenance. Lastly, Chairperson, Table 6 further demonstrates the exclusion of inefficient costs, such as your ESCOM interest and NMD exceedance penalties. And this can be identified in that you can see a zero figure allowed for those items, Chairperson. This municipality's revenue requirement includes a surplus of 27.6 million, calculated using a margin of 10%. And indeed, there were risk factors taken into consideration, including the collection risk, operational risk, and financial sustainability. Chairperson. Cost of supply results indicate a required increase of 20.1%, while the licensee is applying for 11%, which is recommended for approval, Chairperson. This municipality does have cross-subsidization issues and will be encouraged to develop that framework in consultation with its stakeholders, Chairperson. On this one, the municipality and both NERSA and the municipality did undertake public consultation, and there were no comments received by both parties. With that being said, Chairperson, the REC is requested that the tariffs that are based on the cost of supply report are approved as recommended in the tariff analysis section for implementation by the licensee with effect from 1 July 2026. The cost of supply report submitted by the licensee be noted, and the licensee is required to submit a report accounting for all the costs that have been noted in the cost of supply study to enable the regulator to perform its independent verification or audit process by 30 September 2026. The municipality is requested to submit quarterly smart energy losses reduction progress reports for the energy regulator to monitor implementation thereof. Thank you, Chairperson.
Thank you, Mr. Chabalala. Members, questions, points of enhancements, or any other input that you would like to make? Thank you, Mr. Majola. You may come in, sir.
No, thank you, Chair. Just to say thanks to Mr. Chabalala for including the Table 6 operational expenditure, which shows us a breakdown of the various components of the operational expenditure. Is definitely one of the matters that has been raised by the members in the previous sessions of this REC meetings. So thanks for that.
Thank you, Mr. Mkhize. You may come in if we are done, Mr. Majola. Okay, Mr. Mkhize, over to you.
Yeah, thanks, Msheng. We appreciate the improvement in terms of presenting, incorporating what has been said, because we expect that as we move along, we get more clinical and precise, and zoom into the issues that have been raised. So thanks for that. On the rate design, I think if you still need to expand on it in line with what the others have presented. I don't want to get back to that. And then the amalgamation of the tables in terms of the standardization will also need to be applicable. I am just concerned that, when it comes to addressing the energy losses, this municipality is talking about fixing the infrastructure, which then talks to the issues of repairs and maintenance. And you've got that line item that deals with the contracted services, which has increased from 61 million to 68.46 million. But the more we talk, the more I'm getting convinced that we need to extract that portion of this contracted services that deals specifically with repairs and maintenance, so that we can really get to see how this municipality is doing. You recall that even using the past methodology, there were challenges around this whole issue of the level of repairing and maintaining the infrastructure, as to where also it should be kept at. And I think that we need to be able to then also advise the municipality in terms of where we expect them to be at when it comes to repairs and maintenance, juxtaposed with also the refurbishment by way of new capital expenditure to improve the wires business. But other than that, Chairperson, I note also that total operating expenditure of 245 million. Thank you.
Thank you, Mr. Mkhize. I also just want to echo the sentiments shared by Mr. Majola on the enhancement done on the submission to try and cover the guidelines that members have provided in previous application. That's appreciated. However, you may respond to the points that Mr. Mkhize has raised. Over to you, Dr. Chabalala.
Thank you to members. Thank you. The team is really trying. On the issue of rate design, the point is noted and the enhancement shall be effected accordingly, Chairperson. And then on the issue of energy losses, Chairperson, I'm going to speak to it in relation to in totality, inclusive of both losses and repairs and maintenance in that light, in the same breath. I've also actually had a view to say that it almost appears as if all the municipalities are forming a committee and coming up with these generic energy losses plans, because we hardly ever see the improvements. In fact, I even thought at some point, perhaps as the regulator, I don't know how we can structure it. I had ideas to say that maybe we should put it either in the license conditions or as part of the approval letters to say that at minimum, I've experienced to say that municipalities who install check meters at their bulk supply points actually improve drastically when it comes to the issues of energy losses. So more often times, it's not just a matter of infrastructure in terms of the network itself, but you find that even at these connection points, there are a lot of municipalities who are trying to say that Eskom is not doing them good or not doing them justice, Chairperson. But the points are noted. Thank you, Chairperson.
Thank you, Mr. Chabalala. Sorry, I was here. Thank you for that. Mr. Pukula, you covered. I'm saying Mr. Pukula now, you see. Mr. Mkhize, are you covered in terms of the response?
Yes, I am covered. I note even in the comments by DOCRA regarding this whole issue of repairs and maintenance. We need to come out clear on that. So thanks a lot.
Okay. I think for me, just to add a point to be considered by the EPT team on the approved tariffs, I believe we need to really have a team that would, or rather, strengthen the team that is making follow-ups on whether the MUNICs are applying the tariffs that have been approved, and all the components of what we would want a municipality to really focus on as well. We need to monitor that. So, Thabo, as part of that process, we need to have a plan and then ensure that the plans that they are giving us, for example, for energy losses, they are doing what they are doing vis-a-vis the amount that we've given. So if we are not going to be effective in that monitoring area, we may have a challenge again in the next financial year when you consider them. So I just wanted to highlight that it is a thought that I think we are doing, but we need to strengthen that particular area. Thank you. I see Mr. Mkiza's hand is up and Mr. Matibula. Mr. Mkiza?
Yes, just wanted to emphasize your point in the sense that the two industries that we regulate, they do have this tariff implementation monitoring, just to look, especially if it is any unfair practices, as well as there are these other costs like other fixed costs that are put into this, and it is important that we are very transparent around what really happens, what is the resident on the ground really experiencing when it comes to these prices. Thank you.
Thank you. I fully agree with you, Mr. Mkiza. That is, as you said, done in pipe gas and petroleum pipeline. Ndate Matibula, you may come in.
Yeah, Chair, I just wanted to indicate that the plan is that after this process, we will have a postmortem, which will indicate what actually transpired through this application process, which are the municipalities that, or what are the next steps that needs to be taken. Mr. Mkize always talk about something called an intervening period, so that between this particular tariff processing and the next one, we should have worked with the municipalities and dealt with a lot of these teething issues, so that in the next round, when we present with insight. And so after the postmortem, Chair, we will come to the REC and we will indicate what our plan is. And the REC members can enhance on that plan, and that is how we're going to be implementing. So what I'm saying is that all these enhancement and recommendations, we would want to incorporate it into a plan that we're going to be implementing between this particular tariff processing and the next one. Thanks.
Thank you very much, and thanks for that input. We then move on to the next one, next application, which is from Randwest City Municipality. It is a resubmission, if I do recall this one. So we would like Ms. Segwadi to just focus on the issues that the member said they need to be addressed adequately in this particular application, and then take us, reconfirm that what has been applied for. If there's any change, indicate, and take us to the recommendations without really repeating the whole submission again. Over to you, ma'am.
Thank you. Yeah, it is a resubmission from yesterday. I'll only talk to the issues that were raised. The first issue that was raised, it was the issue of, it was raised by Ms. Maseti, if I'm not mistaken. Regarding the energy losses, saying that it may not be very easy to handle, especially where there is a high illegal connection. Maybe the municipality may need help from law enforcement. So we need to, the team need to be realistic and consider other aspects. So what we've done is that we communicated with the municipality, and the municipality shared a report, a plan on how they are going to deal with this. How are they dealing with it, because they've already started the project. So the report is that they've said shows that the energy loss increase decreases from 41% to 35%. In this current year 25-26, which is an improvement. So the municipality also shared the progress on the initiative so far, on what they've done. They're saying that they replace old meters, even though they don't have that, they part of the law enforcement, but what they have, it looks like it's working for them. So they already replaced all. They are replacing all old conventional meters with new spill type meters. And then also they are relocating of the electricity meters inside properties to new pole, and then all house owners must not have access to meters on the keypads. And then also they are doing the regular house meter audits, and then also the audits on no buy or low buy customers. And then they've already replaced 2,000 plus meters with a new split type meters during the 25-26 financial year, hence the reduction of the energy losses. And then also they're also installing the bulk check meters at all ESCOM intake points to verify ESCOM invoices. And then the next phase that they're gonna do is that then they will install a zonal meters to determine where the biggest losses incur. And then also they also appointed a service provider to revise electricity tariff to determine if tariff are still cost reflective. And then the second one was from Mr. Mkhize. It was an enhancement on 4.4, paragraph 4.4, 3.3, and 3.4 on how the figures were written in millions and billions. So it has been rectified on the document that was submitted. And then Ms. Maseti also mentioned the 18% expenditure figure to be the same as energy losses, but I've checked on the submission. I was only talking about the increase of 18% increase in expenditure, not the losses. And then the other thing, Ms. Maseti also mentioned the sensitivity analysis, the table that we must do the table that shows if the municipality were to reduce the energy losses to 12% and 6%, which we have done. We have included the table in the submission, and then the table shows that if the losses were to reduce to 12%, they'll have a surplus of 5.31% with net revenue of 1.367 million. And if they were to reduce the losses to 6%, the municipality will have a surplus of 11.28% and realize a revenue of 1.459 million. This indicates that the energy losses is a big contributor of the municipality deficit, including also the collection rate, which is sitting at 76%. Yeah, 76%, which is lower compared to the 95% benchmarks. Also, the last one, Ms. Masiti requested that the team double check what is the connection fee before we disallow. There are cases, she mentioned that there are cases where this is allowed as a once-off, depending on facts from the municipality. So yesterday it was Friday, so the team have tried to get hold of the municipal officials, but they haven't come back to us. So what we'll do, we'll continue to engage with the municipality, as this does not only impact only on these municipalities, but for most of all the municipalities, to split or maybe to mention what is it for, so that we can know if we disallow or we allow it. So NESA will continue to engage the municipality to break it down for us for future application. The recommendations are on page 244 of 398 and are read as follows. The tariffs that are based on the cost drivers are approved as recommended. The tariff analysis on the tariff analysis section for implementation by the municipality with effect from 1st July 2026, and the REC to note the cost drivers submitted by the licensees. The licensee is required also to submit a report accounting for all the costs that have been noted to enable the regulator to perform its independent verification audit process by 31st January 2027. The municipality is required to submit a quarterly smart efficiency with improvement measures. They've already submitted, so they just need to submit a quarterly progress report to NERSA on the progress of reducing the energy losses. And lastly, also taking all other enhancement and as guided by the members in yesterday meetings and today meetings, and also we'll also include the rate design table and also the table indicating the impact of the increase, which is different from what the cost structure says and what the municipalities are applying for. I just have to confirm the percentage increase as set by the CEO. But nothing has changed since yesterday, so we just dealt with those issues.
Okay, thank you very much. But before I allow the members to come in, there was a point that was raised as well that was part of the referral back. It's so that the numbering in your submission now has changed. There was a 3.1, paragraph 3.1.4 that had a 6% and a 7% that was said was not clarified. You may have clarified it in what you were, in how you were responding it, but I couldn't locate it or get a sense as to how you clarified it. If you don't mind, you can just repeat that for me.
Yeah, I remember that statement. Yesterday when I started presenting, I spoke to it that it was not supposed to be there. It was supposed to be
all right. That's fine.
Yeah.
Okay, that's fine then. I just had it in my notes as something that still needs to be clarified.
Okay.
Thank you very much, Ms. Sikwadi. Members may come in on this application. I don't see any hand. Oh, thank you. Mr. Mkiza, you may come in. You may be muted, sir. Abu Mkiza, you are muted and your hand is up. I'm not sure whether you're voting. You are muted, sir. Oh, we haven't. Yeah, you can. Okay, start from the beginning.
Yeah, I'm looking at the issue of energy losses and the interventions coming from the municipalities, from this municipality. You know, if you look at 3.1.6.8, they've got here a service provider revising the electricity tariffs. I'm not so sure whether it is the same provider that is now looking at the COS in assisting them. But my concern is that in all of this, you don't find something clear regarding collaboration with law enforcement agencies, because a large part of this is actually criminality, but we don't seem to be addressing that aspect in particular. So somehow we should interrogate the sufficiency of the intervention. And secondly, when it comes to improvement, there's a point I don't want to repeat, is that we are two years in lag. We were lagging two years behind, and it's important to look at reducing that lag, because even now we could be addressing some of the challenges that have actually worsened. Maybe the situation is much worse than it's reflected here. So let us also look at that when we're considering the whole framework. Thank you.
Thank you very much, Mr. Mkize. And I think for me, one of the points that I have noted with appreciation is on table 4. I've raised the issue of other revenue. That line item that talks to other revenue, it's bolded, and there are other items indicated there. If you can see on this one, it says clearly reconnection fees, fines, and penalties. The last one, fine and penalties, is quite clearer than to also bring in and say other, what you call other revenue. So maybe the team, if they can note that that is a better sort of insertion of that particular item than to say other revenue. So if it may be noted, I will appreciate it. On that note, members, Ms. Gwadi, anything else from your side? Do you want to come in?
Yeah, I just want to confirm on the tariff part. Yeah, they've already appointed a service provider. We have already met with him, but then we said no, we're gonna work it for the next financial year. on the restructuring of the tariff to be cost reflective.
Okay, all right. Thank you. Mr. Mkiza, are you covered?
I'm covered. Just a short thing. The 9.03 versus the 9.01, what transpired there? If you look at table 4.
Okay, let me try to open it.
Page 258.
Table 4, okay. Oh, okay. On the 9.20 is before we took out the inefficiencies of Eskom debt and FBE pay to Eskom. But then after removing all those, the cost is structure escalation is recommending 9.03.
Okay, but finally we are recommending.
Just reconcile the two, please.
Yeah, we'll do. Yeah, the municipality is applying for. I just want to confirm how much is it that they're applying for. I think it's 9% or 9.01.
9.01.
Yeah, 9.01. Yeah. Yes, I will do that.
So what Mr. Mkiza is saying, in the text as well, just try and have a write-up explaining that the 920 was what you did when you were analyzing the COS, when taking out the inefficiencies that you have mentioned, you ended up with the 903, and they've applied for 90901. When we were doing your calculations as well, you got to that particular 901 as the acceptable level that should be considered for the municipality. Am I interpreting it correctly? Ms. Sekali, Ms.
Yes, yes, yes.
Okay. So what we're saying is, let's just add that in all these submissions so that we don't get the same question being asked over and over again. Thank you, members.
Yeah, but it is there on 4.10. Yeah, it's there on paragraph 4.10. Yeah.
Okay, all right.
Yeah.
4.10 talks about contracted services, but if it's covered, 4.10 talks about contracted services.
Please, let's not waste time. Let's just say we are going to
yeah,
to
cover.
Yes, Chairperson.
Yeah, we'll
all
do
right.
it.
Thank you. On that note, members, can I get an indication that you support the recommendations with those enhancements that need to be made onto the submission and other enhancements that applies to it based on previous applications? Thank you, Mr. Majola. Thank you, Mr. Mkiza. Also support. We move on to the next application, which is from Rustenburg Municipality. Ms. Mapitsing, over to you, ma'am.
Thank you, Chairperson. Rustenburg local municipality is situated in Northwest Province, and the municipality submitted its tariff application together with new cost of supply study on 31st March 2026. The municipality conducted its own public consultation process, and then as we highlight, we will request them to give us the proof that there were no comments. NESA received 2 objections raising concern related to a quality of electricity supply, and then Chairperson, the objection we addressed in the submission. NESA, we responded on this matter. The municipality revenue requirement in Table 5 was determined using the cost plus approach in line with NESA cost of supply framework. The allowable revenue was based on verified bulk electricity purchase and electricity operating costs supported by 24-25 deforms, trial balance and audited AFS. Only prudent and efficient costs together with their reasonable surplus are recommended for approval. With regard to assets, the asset value of this electricity business is sitting at 1 billion with a depreciation of 36 million was extracted from the municipal AFS, trial balance and deform for cost verification purpose. To ensure that surplus is aligned and aligned to risk and compliant with legislation. A key requirement of NESA COS framework is that only efficient and prudent in-care costs may be passed through to customers. In compliance with this requirement, FBE paid to Eskom amounting to 5 million was identified as inefficient and was excluded from the allowable revenue. Also, NESA, we adjusted the cost of material and supply. We disallowed, I think in the submission, Chairperson, I just want to highlight that I wrote the figure that we allowed of 18 million, but we disallowed 6 million on the basis that, Chairperson, what the stakeholders raise regarding the quality of supply, we engaged the licensee, and yes, previously they were not doing corrective maintenance, but then we informed them that we're going to disallow the 6 million until there's a action plan, corrective measures, there's a corrective measures. Sensitivity analysis indicated that if the losses are reduced to 12, the financial position improves significantly from deficit of 5.1 to a surplus of 14, with the net revenue about to 400 million. To ensure that the surplus is aligned with the level of risk associated with this municipality, a surplus margin of 2% is recommended, Chairperson. Yes, Rustenburg margins therefore sits below the lower bound of the framework range of 10 to 20, and it's not excessive to, we allow that so that it's not excessive to a detriment of customers. In terms of performance, this licensee, Chairperson, is not performing very well, as I highlighted, by the growing energy losses and also the deficit share cost. With regard to the share cost, the costs were verified with the DFOM, against the DFOM, trial balance, and the audited AFS to ensure that they relate only to electricity business. And then in the absence of cross-subsidy framework, the Munich applied 10% increase. Actually, I just want to highlight that this Munich initially applied 12% and subsequently changed to 10% increase. And then, as I mentioned earlier, we did some adjustment and then it came to 9%. This is what we allowed them. We allowed, NESA allowed the 9% across. The municipality will be required to develop cross-subsidy framework. Conclusion, the municipal cost of supply study indicated that to reach full cost reflectivity, they require 10. Yes, in the submission, it shows 9.1, Chairperson. However, the original, when it came originally, it reflected 10, and then we adjust, when we did the adjustment, the increase is sitting at 9 overall across full to reach a full cost reflectivity show 9.1. As I mentioned, that 12%, we adjusted the tariff to 10. We adjusted the tariff to 9.01, not that 9.1 the study shows. In terms of the recommendation, the tariff, the recommendation reads as follows: the tariffs that are based on COS study are approved as recommended in the analysis section for implementation by the municipality with effect from 1 July 2026. The cost of supply study submitted by the municipality is noted. The municipality is required to submit a report accounting for all costs that have been noted in its COS 3 and to enable the energy regulator to perform its independent verification process. And the Munich is required to submit sorry, Chairperson, let me read that one. The Munich is required to submit a quarterly smart efficiency with improvement measures identified in reducing high energy losses by 30 September 2026. Thank you, Chairperson.
Chairperson, you're on mute.
Sorry, I was just trying to assist Ms. Mapiting on the last one. It's the submit quarterly reports on smart efficiency improvement measures on identified losses. And just yeah, you are on the correct path, but just refine it by adding improvement measures on identified losses. Thank you. Members, the submission is before you. Any questions? Issues of clarity. Mr. Mkhize?
Yeah, I'm covered, again, noting the improvement as we move along. But just on the responses with regard to the comments by the members of the public. I think it's important to be a bit more definitive in terms of what we need to do within the ambit of the law, instead of always maybe saying we're going to encourage the municipality to do ABC. Like I won't mention it because it appears on several areas. I think we must be definitive in terms of this is what we are going to we require them, and this is how we are going to follow it up and make sure that it is done. When a matter is outside of our purview, like the issue of what do you call this, the criminality, we need to be clear there that we are going to, we also, in a way, we liaise with other authorities, including the law enforcement through COGTA, because these reports, we do kind of use them to liaise with other authorities and the department. So let's really work here on this one. Even the grid collapse in terms of what we require of the municipality. I don't think that we should give an impression that we are not very strong when it comes to enforcement, compliance monitoring and enforcement, because it's an area that is important for us to use the little teeth that the law gives us as a regulator. Thank you.
Thank you, Mr. Mkize. I don't see any other hand. I don't have any input to make on this one. Ms. Mapitsing, any response that you want to make on this application, on the comment made by Mr. Mkize?
Ms. sorry. Ms. Tole, what we will do will enhance this stakeholders, our response as the regulator. I will enhance that part. It's more on the comments and the response from our side. I will enhance them.
Okay, all right, yes. And also there would be a need to indicate how they have been taken into account in the analysis on our side. Yes. On that note, with that enhancements that needs to be made and other ones that have been mentioned in past application that may be applicable on this one, members, I would want to take you to the recommendation, take into account those enhancements. By show of hand, members, they have been read into the record. They are on pages 269 to 270 by show of hand. Thank you, Mr. Mkize. Thank you, Mr. Majola. Also, support with those enhancements that members have made. We then move on to item 11, or rather the next application from Sunday River Municipality. It is a resubmission and it will be presented by Ms. McClure to the committee. Ms. McClure, over to you, ma'am.
Okay, good afternoon, Chairperson, members and colleagues and members of the public. Sunday's River tariff application was discussed yesterday and it was not considered as it needed some enhancement on some of the on the issues raised by the members. The first issue was the figures presented in table 5 of the revenue requirement needed further enhancement, and it has been enhanced. And the second question was members wanted clarity on whether the depreciation under operational expenditure and the current year depreciation under general, if this doesn't mean a double dip into the allowable revenue. The response to that is that the depreciation under operational expenditure, it relates to distribution of electricity infrastructure, and the depreciation under general, it relates to the total value of the assets. Okay, that's all the the questions that were raised by the members, and the municipalities applying for 10.30 for 2026 financial year. And that with regards to the recommendation, we say the tariffs that are based on the CO's drivers be approved for implementation from 1 July 2026. The cost of supply for cost drivers submitted by the municipality be noted. The municipality is required to submit a report accounting for all the costs that have been noted into the COS to enable the energy regulator to perform an independent verification by 31 January 2027. The municipality is required to submit quarterly smart energy losses reduction progress report by 31 September 2026 for the regulator to monitor implementation thereof. I thank you, Chair.
Thank you, Ms. McGraw. Members, questions, issues of clarity, and also an indication that all the items that were raised when this application was first discussed, if all your points have been covered, please do confirm that. And Mr. Mkiza, over to you.
Thanks, Chairperson. I want to talk to the issues that have been previously raised, but just want to confirm that the figure of 3.070 million of the current depreciation is the one that is used in this formula and not inclusive of the general one. I just want that confirmation, because that is the what all this is about, in terms of ensuring that and confirming that there is no double dipping. Thank you.
Can I come in, Chair?
Yes, you may come in, Ms.
I can confirm that there is no double dipping. Thank you.
Yeah, but just explain to Mr. Mkiza that there's no double. Okay, no, that is fine. He's fine with that. You were just too brief to the point. I was expecting you to say that there's no double dipping in that with this and that. But if he is fine with that, that is fine. Members, any other comments on this particular application? I was going through my notes. I do not see anything that I've noted in relation to this particular application. Anything else, members? If there is no further input from the members, may I then request the members to indicate that they support the application, the recommendations on the application, together with the enhancements that have been made. The recommendations have been read into the record. By show of hands, members, please do come in. Thank you, Mr. Majola. I do support. Thank you, Mr. Mkiza. We are now going to move to the next application. It's an application from Ubuntu Municipality. Ms. Matlaku, please take the committee through this application. Over to you, ma'am.
Thank you. Thank you, Chairperson. Good evening to you, members and colleagues. With regard to this application for Ubuntu, it is a application. Municipality is situated in the Eastern Cape province. The municipality has applied for an average tariff increase of 10.30%. This increase was supported by a cost of supply study, which used the cost plus methodology. In terms of consultation, the municipality submitted its council resolution, and they've also submitted proof of having conducted customer consultation together with its tariff application on the 31st of March 2026. The municipality has indicated that there were no objections that were received from their customers. And from NESA's side, the application was published on the NESA's website in accordance with the prescribed PAJA Section 10 requirement, and no objections were received. In terms of the financial and technical analysis of this application, the municipality is not running a very efficient business. The Ubuntu electricity business operates or operated at a deficit of 40.38%. This is for the 2024-25 financial year, and this shows a significant decline from the 11.99% deficit which was recorded in 23-24. So apart from the high energy losses, the increased deficit is mainly due to a 51% increase, 51% reduction in other costs. This is following a once-off write-off of Eskom's debt amounting to 25 million in the previous financial year. And for 24-25, no debt were written off. In terms of the energy losses, indicated that the energy losses are at 26.16%. I must also just note that the municipality is in arrears on its bulk account with Eskom, and the municipality has recently been placed under a debt relief arrangement under which 29 million of its debt was written off. And the municipality has also indicated that it is awaiting a second debt write-off, which is expected to amount to approximately 1/3 of its total outstanding debt to Eskom. We've done a sensitivity test on the energy losses, and it shows that if the municipality were to reduce its losses from that 26% to 12%, it would recover an additional revenue of 5 million rands. And with the energy losses being reduced to 6%, it would recover an additional revenue of 7.1 million. With the deficit levels being reduced to 11.93. Chair, this is if everything else remain the same. In terms of the cost of supply study, the municipality, the study reflected an average tariff increase of 10.30%. To reach cost reflectivity, and the municipality has adopted a 3-year phasing approach to gradually align their tariffs to the cost of supply outcomes. This was done in order to mitigate tariff shock. A cost adjustment tool was used for this tariff analysis, and the underlying cost considered were OPEX and CAPEX, and also the related depreciation. We looked at the asset value for the municipality, and it amounts to 9.7 million, and the associated depreciation was 614,942, and this was calculated using a straight line method, and this information was extracted from the deforms and verified against the audited financial statements for 24-25 financial years. In the asset base, it was based on the asset based on the asset register included two main components. First one being the LV network, electrical infrastructure. This particular one had a depreciation value of 614,942,000, and the second component of the asset register was on the medium voltage substations of the electrical infrastructure, and the value associated to depreciation amounted to 1,174. These values are aligned to the audited financial statements, and they've been verified, and they correspond to the financial statements. In terms of the allowable revenue, the allowable revenue for 26-27 was derived from efficient and prudent operating costs, which amounted to 45.2 million, and depreciation of 651,839, and a surplus of 759,641. The surplus was assessed against key risk factors, including revenue collection risk, such as non-payment and bad debt, operating risk, including the energy losses. That the risk was also the associated risk factor was also the need to maintain financial sustainability of the electricity function. In terms of the inefficiencies that were identified, they were related to Eskom debt interest amounting to 587,746, and the bad debts were kept at 5%. Another component which were identified as an inefficient item was FBE paid to Eskom amounting to 508,000. These were all disallowed as it's highlighted under Table 4 of the RFD. This was to ensure that customers were not burdened with avoidable costs and costs that are under the municipality's control. In terms of the tariffs for the municipality, the tariff structure reflects cross-subsidization where higher consuming commercial and industrial customers subsidize residential customers. And we're saying that this should be systematically reduced over the 3-year period to try and support a managed transition towards a cost-reflective tariff while also avoiding abrupt impact on vulnerable customers. The municipality will therefore be encouraged to develop a cross-subsidization framework to objectively address the cross-subsidization issues in a transparent and fair manner. Chair, while the cost adjustment tool indicates that the municipality should increase its tariff by an average of 10.92%, as highlighted in table 4, the municipality applied for a 10.30 across all tariff categories. And this increase will ensure that the municipality meets its Eskom bulk increases and also while mitigating tariff shock and protecting customers. Moving on, Chair, to the recommendations, we've taken note of all the comments made by members on the previous presentations, and they've been noted. These includes including the tables on the rate design, and all this will be incorporated in the revised RFD. I'd like to then direct members to the recommendations that's on page 346 of 398, which reads as follows. First recommendation is that the tariffs that are based on the cost of supply report are approved as recommended in the tariff analysis section for implementation by the municipality with effect from 1st of July 2026. Second recommendation is that the cost of supply reports be submitted by the municipality be noted, and that the municipality is required to submit a report accounting for all the costs that have been noted on its cost of supply study to ensure that the regulator perform its independent verification process by 29 January 2027. And lastly, that the municipality is required to submit quoted smart efficiency with improved measures identified energy losses reduction progress report for the regulator to monitor implementation thereof by 30 September 2026. Thank you, Chairperson.
Thank you, Ms. Matlaku. Members, comments, points of enhancements on this particular application? If you have any, please do come in. Yes, Mr. Mkiza.
Thanks, Chairperson. I hope you'll be able to hear me. I don't know what's happening with my gadget here, but I appreciate what Ms. Mapizing has presented. I'm just concerned when looking at the table here, table 4 on this revenue requirement. There are these vehicle expenses, which I think, I don't know whether it's fuel or what. And then the commission paid, they're not very high figures, but still we must work on it on principle. And I note also the charges from other municipal departments. if you look at it, they're even higher, sitting at 1.5 million. They are higher than even the salaries, wages and allowances when you exclude repairs and maintenance, which sits at 1.328 million. I wonder what is this was aimed at, because as I said, there are these other increases that could creep in ultimately, that the amount on the bill looks much more than what we approve in terms of the increases. Just to zoom into that, or else if you still need to probe further, you then have to consider that. Thank you.
Thank you, Mr. Mkhize. Mine, I think I may have missed in the presentation as to whether did we get any indication from the Munich on their public participation process. I may have missed that. If you don't mind, you can repeat it if you did state it. Over to you, Ms. Matlako. That's all from myself.
Thank you, Chairperson. Starting off with your comment, yes, I did indicate that the municipality did run through their public consultation process, and there were no comments. They indicated that there were no comments received from their end. In terms of what Mr. Mkhize questions. The commission paid, that's a line item that relates to fees paid to third-party services providers who collect municipal revenues on their behalf, Chair. And I think on the issue of what is entailed under I think it was charges from other departments. Chair, can I request that as I do enhancement to make enhancement to the final RFD, then I break down the components of that amount for the charges from other municipal department. If that's fine, Chair. Thank you.
Okay, no, that's fine. Mr. Mkhize, are you fine with that? Thank you. On that note, the recommendations have been read into the record. They are on page 396, and there are enhancements that have been highlighted that needs to be made to the final RFD. And on that note, may I then get an indication from the members that they support the recommendations as presented to the committee? Thank you, Mr. Majola. Mr. Mkhize, I also support. We move on to the next application. It is from Umsobomvu Municipality. Ms. Matlo, it is a resubmission. Please do focus on the issues that were. In fact, this one is a resubmission. We didn't really get into it at all. You requested that we also withdraw it, so present it as being the first time it's presented to the committee. Over to you.
Okay. Good afternoon, members, chairperson, colleagues, and member of the public. Umsobomvu municipality is situated in the Northern Cape. The financial and technical performance are not satisfactory due to high energy losses and percentage deficit, and the municipality have a plan in place to improve the situation with regards to energy losses and the tariff application. And the municipality has NESA has consulted on the tariff application, and there were no comments received by the stakeholders. And also the municipalities have consulted, and we didn't receive any comments from the municipality, and they've submitted their proof of consultation. And if the municipality, the what if scenario was done, and we discovered that if the municipality reduced the energy losses by 12%, they will have a surplus of 2.83, which will translate into a revenue of 18 million. The tariff application is based on a cost plus methodology, and the adjustment that were made, the tariff application was based on a cost plus methodology, which means the adjustment tool was used to determine the tariffs based on the cost drivers, and the costs that were used to determine the revenue requirements were verified on the ESCOM invoices, DFORM, trial balance, and audited financial statements, and they are all aligned. And the municipality is applying for a surplus of 4%, and to ensure that for a surplus of 4%, and for us to be able, before we can even recommend the 4%, what we did where we consider the risk element, considering the 4%, taking into consideration the financial and the technical performance of the municipality. And we have identified the risks such as the revenue collection risk, the operational risk, and the financial sustainability risk. And the COS results has shown an average increase of 30% for the municipality to reach cost reflectivity. However, the municipality has opted for an increase of 9.01%, and this was considered by taking into account the financial performance of the municipality, as the performance of the municipality is not satisfactory. And with regards to the cross subsidy, the domestic customers are being subsidized by commercial and industrial. However, going forward, the municipality, they said they will do a review of the cost of supply study, also that will make sure that going forward, the industrial and the commercial and industrial tariff, the load is being reduced in terms of cross subsidy. And then the municipality is implementing 9.01, which is uniform approach in all their tariff categories. And then the recommendations are as follows. The tariffs that are based on cost drivers are approved as recommended for implementation on 1 July 2026. The cost of supply report submitted by the municipality be noted. The municipality is required to submit a report accounting for all the costs that have been noted in the COS study to enable the energy regulator to perform independent verification process by 31 January 2027. The municipality is required to submit quarterly smart energy losses reduction plan progress by 31 September 2026. I thank you, Chair.
Thank you, Ms. Nato. Members, any questions, issues of clarity, or point of enhancements on this particular application from Msobong? Ms. Nato, may I request that you try and make sure that the track changes that are in this particular application are addressed in the final RFT, please. Mr. Majola?
Just thank you, Chair, and thank you to the presenter. And just a quick one. I'm looking at the supplementary 2-pager for Umsobo municipality. And it says here there was an issue raised that the figure presented in Table 5, which is the revenue requirement, requires further enhancement. And the response is that the updated table has been successfully integrated into the submission. So it sounds like you worked overnight, because the meeting was yesterday. You worked overnight so that, amongst other things, you're going to update this table. And I'd just like to thank you for that, because it actually makes, our evaluation and decisions much, much quicker, because we can see, on one table, all the elements that we need to consider to make a decision. So thank you for that. But it also shows that it can be done in one night. And when I say it can be done in one night, I'm actually talking to the people that must still do theirs for the next meetings. Oh, thank you.
Indeed, Mr. Majola. Mr. Mkhize, you may come in.
Thank you, Chairperson. I think in the issues that I would talk to refer to the all the matters that I think one has raised before. but also just on this table 5, look at this issue of contracted services in terms of splitting it to reflect the repairs and maintenance. Even these other expenses, if you have something maybe to define, I think it would assist. I note the issues of the losses and where this municipality is, which is concerning. But at the same time, I think we appreciate also in the effort put in addressing the issues that have been raised, but at the same time, not forgetting the rest of the team, because we do appreciate the fact that you are working under extreme pressure, but it's for us to work together also as yourself to work together as a team to ensure that in such an environment, there's also this issue of the being prone or the likelihood of having some mistakes. So the importance of quality checking and using, one another as a soundboard in dealing with these matters. Thanks.
Thank you, Mr. Mkhize. On that note, I do not have any further addition other than to assume that Ms. Matlo has noted the new additions or guidelines that were added throughout the applications of today, one of them being adding the rate design table and also a line that explains that total increase required, that is on the revenue requirement table 5, which is 911. So I won't repeat it in other application, but it's going to be a standardized enhancements to be factored in all the applications. On that note, members, may I get an indication that you support the recommendations as read into the record with the enhancements that have been made onto this made in relation to this application. Thank you, Mr. Mkhize. Thank you, Mr. Majola. I also support. We then move on to the next application, which is from Umuzi Wabantu Municipality. Ms. Matlapa, over to you.
Thank you, Chairperson. If you can just give me one second, please. Apologies for this. Okay, yeah. All right. So Umuzi Wabantu is a municipality situated in the Eastern Cape province. The municipality has applied for an average tariff increase of 11%. That is supported by a new cost of supply study, which used the cost plus methodology. The municipality, in terms of consultation, the municipality submitted its cancelled resolution and proof of having conducted customer consultation. They submitted it together with the tariff application on the 30th of March 2026. Municipality indicated that there were no objections which they received from their end. From NESA's side, the application was published on the NESA's website in accordance with the prescribed requirement of PAJA Section 10, and there were no objections received. In terms of the financial and technical analysis, the municipality is operated at a deficit of 1.24% for the financial year 24-25. And this is an improvement from the 9.37% deficit, which was reported in 23-24 financial year. The total revenue increased by 23%, while the total expenditure rose by 14%. And in terms of the energy losses, there was about 6.8 million in lost revenue The electricity revenue remains under pressure due to the high cost of bulk purchase, which constitute approximately 80% of the total expenditure for the municipality. Furthermore, the municipality is also purchasing much of its electricity from Eskom under the Night Safe Urban Tariff, which is considered to be a more expensive than the alternative tariff options. The municipality have not yet moved to the new tariff structures which were approved through the RTP. The table 3 of the RFD shows energy losses recorded at 12.42% for the 24-25 financial year. The municipality needs to implement measures to keep these losses to a single-digit number. We've done a sensitivity analysis on the energy losses, and it shows that if the municipality were to reduce its losses to 12%, it would recover an additional revenue of about 277,000. And if the energy losses were to be moved to a 6% increase, it would recover an additional revenue of 4.1 million. That is if all else remain the same. In terms of the cost of supply study, the study's outcome reflected an average tariff increase of 24.8% for the municipality to reach cost reflectivity. But the municipality has adopted a 3-year phase-in approach to gradually align the tariffs with the cost of supply outcomes, thereby mitigating tariff shock. The underlying costs considered in this application include operating expenditure and capital expenditure in terms of capital expenditure related in terms of depreciation. So aligned to the NERSA's COS framework, costs were built up from verified bulk purchases based on Eskom invoices and verified electricity-related operating costs. These were tested against due forms, trial balance, and audited financial statements. The municipality reported an asset value of 13.9 million. This was an aggregated figure from the AFS, but out of that amount, 5.2 million related to the electrical infrastructure, and the depreciation related to that, the portion of the electricity, the depreciation amounted to 494,000. And these were extracted from the due forms and verified against the audited financial statements for the 24-25 financial year. Just in terms of the asset based on the asset register include two components. The first one being the electrical infrastructure, that portion of the assets. The depreciation related to that amounts to 411,000. And then with regard to the electrical equipment portion of the asset register, the amount, depreciation amount related to that amounts to 83,041 rands. These values are aligned to the audited financial statements. In terms of where the municipality is with regard to Eskom's bulk account, the municipality is up to date with Eskom's bulk account, and the municipality has got no NMD exceedancies. In terms of the allowable revenue for 26-27, the allowable revenue was derived from efficient and prudent operating costs, which amounted to 11.1 million, with the depreciation of 572,000 and a surplus of 7.1 million, which is equivalent to a 9% when you compare it to the total amount of the revenue. The surplus assessed. The surplus was assessed against key risk factors that includes revenue collection risks, such as non-payment and bad debts, operational risk, including energy losses, and also the need to maintain financial sustainability of the electricity function. There were inefficiencies related to bad debts, which were disallowed as it's highlighted under Table 6, thus ensuring that customers are not burdened with costs that are under the municipality's control. So while the proposed increase of 11% that the municipality is requesting are aligned to the overall revenue requirement, the regulator is of the view that the tariff that the future tariff adjustment should be more targeted, taking into account cost of supply results, taking into account the extent of cross subsidization, and also the need to progressively move towards cost-reflective tariffs. And when looking at the tariffs themselves, the tariff structure reflects cross-subsidization, whereby higher consuming commercial and industrial customers seem to subsidize residential customers. And this should be systematically then reduced over the period, the 3-year period, in order to support and manage a transition towards a cost-reflective tariff while avoiding abrupt impacts on vulnerable consumers. The municipality will be encouraged to develop a cross-subsidization framework that would assist to objectively address the cross-subsidization issues in a transparent and fair manner. And in conclusion, Chair, the regulator finds that the proposed tariffs increases they seem to be reasonable and consistent with the approved revenue requirement. However, the municipality is encouraged to ensure that future tariff structures are better aligned with cost drivers and support long-term financial sustainability. Moving on to the recommendations, Chair, we've taken note of all the comments made by the members from the previous presentations, including that we should include a tariff design table and enhance the recommendation section properly. Based on that, Chair, I'd like to then move the members to, or direct the members to the recommendations, and I'm going to read them into the record as follows: that the tariffs that are based on the COS report are approved as recommended in the tariff analysis section for implementation by the municipality with effect from 1st of July 2026. The cost of supply report submitted by the municipality be noted. The municipality be required to submit a report accounting for all costs that have been noted in its cost of supply study to enable the regulator to perform its independent verification process by 29 January 2027. And lastly, that the municipality is required to submit quarterly smart energy losses reduction progress report for the regulator to monitor implementation thereof by 30 September 2026. Thank you, Chairperson.
Thank you, Ms. Mato. Members, any questions or issues of clarity in relation to this particular application? Please, if you have any, do come in. Yes, Mr. Mkhize.
Thanks, Chairperson. Just want to get clarity with regard to the portion of the depreciation if one considers table figure 2 with the 629,200,000 rand, and then as opposed to the 572,000. Just need to get clarity there. Maybe because I heard him mentioning number, I heard mentioning numbers, but I'm not so sure how they tie up.
If I may come in, Chairperson, may I just request Mr. Mkhize to direct me to the table? You said figure 2.
Figure 2.
Figure 2. All right. So the depreciation figures which I was reading out were for the period 24-25 and for 25-26, and these these depreciation figures amounting to 629,200 for the year 26-27 financial year. I don't know if that clarifies it, Chair.
In other words, you've got the one that is the one that reflects on table 6 being the 572 which year that is the operational expenditure now going forward that you expecting.
Yeah, those are, I think
they're more like projections.
Yes, they are projections, Chair. Thank you.
Okay, that's fine.
Thank you, Ms. Macleod. Thank you, Mr. Mkhize. I don't see any other hand. I don't have any input on this one. On that basis, members, can I get an indication that you support the recommendations with the enhancements made on this application, together with those that are relevant to it that were made in the past application and today? Thank you, Mr. Mkhize. Thank you, Mr. Majola. I do support as well. On that note, members, we are to move on to the next set. May I request that we take a brief break? It's 18:29, almost 18:30. Can we come back at 18:45 if that's fine with members? Mr. Mkhize, your hand is up.
It's fine, ma'am. I just got a slight challenge. You know, I've got this challenge at between 7 and 7:30. I don't know how I'm gonna manage it. Yeah.
Okay, so do you want us to proceed until 7 o'clock and then we then break till 7:30? We can proceed.
Maybe if we do it like that, please. I don't want to impose myself. Yeah.
All right. No, that's fine. Mr. Majolo, are you fine with that? And I trust that the team as well, they will also bear with us, and we'll get a break from 7 to 7:30. On that note, we will move on to the next applications. And the first one that is really a resubmission, it is from Bido Municipality. Ms. Matumbu, if you can follow the guidelines or guidance that we have provided on how to present these applications that are coming back for the second time. Over to you, Ms. Matumbu. Thank you.
Thank you, Chair. Good evening, members, colleagues, and members of the public. Bido Municipality was resubmitted based on issues raised by Ms. Masetti and Mr. Mkhize. The first issue was related to the calculation of the revenue requirement in Table 4 of the RFD, especially with the treatments of fines, penalties, and forfeits. It was identified that in the initial submission, these amounts were incorrectly reflected as part of operating costs, whereas they should have been recorded under other revenue, especially the reconnection item. The table was amended accordingly, and based on the original table, the cost adjustment result indicated that the municipality should increase its tariffs by an average of 15.66. However, after correcting the allocation of the fines, penalties, and forfeits to the appropriate revenue line item, the revised cost adjustment resulted in a 15.06%. Notwithstanding the outcome above, the municipality applied for a lower average tariff increase of 12.12 for the 26-27 financial year, which reflects an attempt to balance the municipality's cost reflectivity requirements with affordability considerations and the need to mitigate tariff shocks on its customers.
The second issue that was raised by Mr. Mkhize was related to the calculation of the differentiated tariff increases and whether this collectively result in the proposed average increase. We can confirm that the differentiated increases across the various customer categories and tariff components were specifically structured to achieve an overall average increase of 12.12 for the 26-27 financial year. And the municipality did not apply a uniform increase across all its tariffs because instead the tariff adjustments were differentiated based on the cost of supply outcomes. They also took into consideration customer consumption profiles, affordability consideration, and the need to mitigate tariff shock to certain tariff categories of customers. And as a result, some of the tariff categories reflect a increase above the average increase the municipality is applying for, while others reflect a lower increase, some even a decrease. So when all the tariffs proposed are applied to the municipal projected sales and revenue mix, the overall impact is the average increase of 12.12. I don't know if I should read into the record the recommendations as I've read yesterday through you, Chair, for guidance.
Yes, please do go ahead and read them into the record.
All right. It is therefore recommended that the REC approve the tariffs which are based on the average price increase of 12.12, which NERSA supports for implementation by the municipality from 1 July 2026. The cost of supply report submitted by the municipality be noted, and the municipality is requested to submit a report accounting for all costs that have been noted in its cost of supply to enable the regulator to perform its independent verification and audit process. Thank you, Chair.
Thank you, Ms. Matumbu. Members, questions, excuse me, issues of clarity that you may have on this application? If any, please do come in. Mr. Majola.
No, thanks to Ms. Matumbu for that feedback and well received. Just in connection with that table 4, municipality revenue requirements, yes, thanks for fixing it. But just one more further enhancement. If you can take a leaf from your other colleagues who added 2 more columns on this table. There was a column that says net adjustment, and the last column that says final net determination or something like that. It's very, very good to have this table like that, to include those extra columns so that you can see what the municipality had applied for. We can see what NESA took away or not took away, and then what the final determination of NESA was. Thank you.
Thank you, Mr. Majola. Members, any other input on this particular application? I don't see any hand. Members, the recommendations have been read into the records. May I, by show of hands, get an indication that you support them as read out, and as well as with the enhancements that have been made on this one, and others with input that is relevant to it. Thank you, Mr. Majola. Thank you, Mr. Mkhize, and I also support. We move on to the next one. It is Buffalo City Municipality. Ms. Matlako.
Thank you, Chairperson. Buffalo City is a municipality situated in the Eastern Cape province. The municipality has applied for a tariff increase of 14% that is supported by a new cost of supply study, which used the cost plus methodology. In terms of the consultation, the municipality submitted its council resolution and proof of having conducted a customer consultation together with its tariff application on the 25th of March 2026. Municipality indicated that they have received some comments which they then addressed from their end. In terms of on the NESA side, the application was published on the NESA's website in accordance with the prescribed process based on PAJA Section 10, and there were no objections received. In terms of the financial and technical analysis, Buffalo City electricity business operated at a deficit of 9.91% for the 24-25 financial year. This is an improvement improvement from the previous year's 19.01 deficit level. The total revenue and expenditure for the municipality increased by 28% and 18% respectively. However, the electricity revenue remains constrained by the high bulk purchase. This indicates that the electricity service is not financially sustainable, with costs that are increasing, exceeding the revenue. Table 3 of the RFD shows the energy losses recorded at 32.19% for the 24-25 financial year. It's an increase from the previous year's level of 20.40%. Of this, 30 relates to technical losses, and non-technical losses amount to 22.19%. The non-technical losses are mainly due to illegal connections, meter tampering, electricity faults, and billing errors. And the municipality has indicated that there are attempts currently being made to reduce these losses. They've indicated that there's a self-funding revenue recovery project proposal that is also being considered.
Ms. Matou, you have gone silent after talking about the self-funding project. If you can come back and continue. Let me just see. I think she may have been kicked out of the meeting. Oh, there she is there. Ms. Matou, we can't hear you. Maria?
Chair, is Ms. Mataku. I suggest maybe we move to the next one, and we'll give her a chance when she's connection is fine. But I see she's talking. Let's hear.
Apologies, Chair. I seem to be having network connections. Do I have permission to continue, Chair?
Yes, you may continue. I think your last point that you made was on the energy losses and the self-funding project that the municipality is planning on. I don't know whether initiating or what. Continue from there.
Okay. All right. Apologies for that, Chairperson. Yeah, I was saying that the municipality has indicated that they've got a self-funding revenue self-funding revenue recovery project proposal that is being considered. This is to target about 180,000 of their customers who are non-purchasing prepayment customers. This is to try and rehabilitate this income-generating revenue stream to the institution, Chair. Those are the measures which the municipality indicated that they've put in place. We've also, in terms of the energy losses, done a sensitivity analysis on the energy losses, and indicating that if the municipality were to reduce its losses to 12%, it would recover additional revenue of 923 million. And if the energy losses were kept at 6%, it would recover further revenues of 1.06 billion rands. In terms of the cost of supply study, the COS study outcome reflected average tariff increase of 13.5% to reach cost reflectivity. The underlying costs considered in this application include OPEX and CAPEX related in terms of depreciation. So aligned to the NERSA's cost of supply framework, costs were built up from verified bulk purchases based on ESCOM invoices and verified electricity-related operating costs. These were tested against the deformed trial balance and audited financial statement. The municipality reported an asset value of 16 billion as an aggregated figure from the AFS for the 24-25. Of that amount, 9.6 billion related to the electrical infrastructure. And if you look at the asset register, Chair, they are split into two main components: the MV networks, which has a corresponding depreciation figure of 133 million. And the LV networks with a depreciation figure amounting to 296.7 million. The total amount for the depreciation is 430 million for the 24-25 financial year. Chair, the values are aligned to the audited financial statements. The municipality, Chair, is up to date with ESCOM bulk account, and there are no NMD exceedances for the municipality. In terms of the allowable revenue, the 26-27 allowable revenue was derived from efficient and prudent operating costs amounting to 1.2 billion, with the depreciation of 102 million and a surplus of 23 million. The surplus, Chair, was assessed against key risk factors, including revenue collection risk, such as non-payment and bad debts, operational risk, including energy losses, and lastly, the need to maintain financial sustainability of the electricity function. In terms of the inefficiencies related to bad debts, we're disallowed, thus ensuring that customers are not burdened with avoidable costs that municipality has control over. Chair, while the proposed increases of 14% are aligned with the overall revenue requirement, we of the view that the municipality's future tariff adjustment should be more targeted, taking into account cost of supply results, the extent of cost subsidization, the need to progressively move towards cost reflective tariffs. The tariff structure reflects cross-subsidization, where we see that higher consuming commercial and industrial customers seem to subsidize residential customers. And we believe that this should systematically be reduced over a period to support a managed transition towards cost-reflective tariffs, while also avoiding abrupt impacts on vulnerable customers. The municipality will be encouraged to develop a cross-subsidization framework that will assist to objectively address the cross-subsidization issues in a transparent and fair manner. And then just to conclude, Chair, the regulator, we find that the proposed tariff increase to be reasonable and consistent with the approved revenue requirement. But we also just stating that the municipality is encouraged to ensure that future tariff structures are better aligned with cost drivers and support long-term financial sustainability. Chair, we've taken note of the previous, the members' comments from the previous presentations, noting that we need to include a rate design table. We also need to, for this particular one, include a breakdown of all operating costs that will be included and incorporated in the enhanced RFD, Chair. And just to direct you to the recommendations, I will read them into the record as follows. The first recommendation is that the tariffs that are based on the COS report are approved as recommended in the tariff analysis section for implementation by the municipality with effect from 1st of July 2026. Secondly, that the cost of supply report submitted by the municipality be noted. Thirdly, the municipality is required to submit a report accounting for all the costs that have been noted in its cost of supply study to enable the regulator to perform its independent verification process by 29 January 2027. And lastly, that the municipality is required to submit quarterly smart efficiency with improved measures identified, energy losses reduction. I'm hoping I'm reading this right, Chair. Apologies if I didn't get it right. It was changed during the meeting. I will try. The municipality is required to submit a quarterly smart efficiency with improved measures identified, energy losses reduction progress reports for the regulator to monitor implementation thereof by 30 September 2026. Thank you, Chair.
Thank you, Ms. Macleod. Members, questions, issues of clarity or points of enhancements that you may have on this application? If you have any, please do come in. Mr. Mkhize, you may come in.
Thanks, Chairperson, and thanks, Madam Macleod, for the presentation. I'm a bit puzzled here. You just help me. But I may understand it. There seems to be this depreciation both for the wires and the retail business. If you look at figure 2 on the cost breakdown by functions, and contrary to what one would expect, that the depreciation on the wires is less than the depreciation. Oh, now I note. But it's I thought it's 2.7 and it's 1.8. No, it's 188 and 2. But I just would like to know on the retail side, what entails the depreciation aspect, as we've noticed that we didn't have much on the other applications. That is all from my side, but I must also thank you for incorporating all the issues that we had raised thus far. And I hope that as we move along, also the other presenters will keep doing the same, and we become better as we move along. Thank you.
Thank you, Mr. Mkhize. I think from my side, just issues of clarity or of concern, rather. The street lighting has gone up by 10.7 million. Is that not too high? And as well as I see the energy losses are increasing with a huge percentage, almost 12% increase from the previous financial year, from 20.40 to 32.19. It's quite huge. And as well as the question for clarity on whether do you believe this 14% is reasonable? Because for me, I think when one has to balance the scale of making the customers afford electricity and the viability of the municipality, I think it's just too high. And I just want to get your comment or rather your input on the points that I've made, Ms. Macleod. Over to you.
Thank you, Chairperson. I'll start off with the last comment. If you may recall, in the previous tariff cycle, the municipalities' increases were limited, so they got less than what was due to them. If you remember, the mayor for Buffalo City met with NERSA's chairperson because there were issues around. I think there were riots around the municipality. So in the previous year, there were short change and with the understanding that they would then, for this current financial year, be able to recover whatever they had foregone in the previous year. So I would then say that the 14% that they are requesting, Chair, is reasonable, but maybe with the condition that we monitor the performance for the municipality and ensure that they really reduce the inefficiencies, particularly in terms of the energy losses. All right, and moving on, I think to the question that was raised by Mr. Mkhize regarding the depreciation for the retail under retail, on what exactly entails, or what is entailed in that, under that depreciation. Mr. Mkhize, can I, because I don't have an answer directly right now, can I request that also forms part of enhancing the RFD? We include that in the final RFD that will be published. Thank you, Chairperson.
Thank you. Lastly, for me, the point I almost forgot. What do you understand of the self-funding revenue recovery project? What is it, and has it started? And if it has started, I don't know if you'll have the information of the timing as to when. Will it really contribute to some of the losses that the municipality?
It's a new project that the municipality has embarked on.
Okay, I heard you talking about 180 customers. I didn't understand. Just enlighten me on this particular new revenue recovery project. Ms. Matlo? Sorry, I keep on saying Ms. Matlo, Ms. Matlaku. Sorry, Ms. Matlaku.
Yes, that's fine, Chairperson. Yes, those are the targeted customer numbers who seem to be problematic in terms of non-payment. So that 180,000 are customers that the municipality will be targeting for this particular project that will be kicking in from this financial year, Chairperson. Thank you.
I think we need to monitor these plans that they are saying they'll put in place, because the increase that's being requested, I do not believe is reasonable, but you are saying it is. On that note, with those comments, members, may I then get an indication that you support the recommendations as read into the record with the enhancements that we have made on this one, and as well as previous one that may be applicable to this application. Thank you, Mr. Mkhize, and I do support Mr. Majola. Thank you, sir. We then move on to eThekwini. We are 4 minutes before we finish. Mr. Mkhize, can we break now, and then we will start with eThekwini municipality, so that we allow you to make it for your 7 o'clock head stop. Can we stop now?
Thank you.
Okay. So, members, we are going to stop now, and we will be back at 19:30 to proceed with the couple of applications that are left. We've got a few now. We should finish within the same time as yesterday. Thank you very much. And to members of the public, we are taking a break for about 30 minutes. We will start at 19:30, and may I request IT to pause the streaming of our meeting. Thank you. Thank you, everyone. We'll see you at 19:30 sharp.